explain to us what is the broad business model of Davangere? If you could tell us the geographical kind of reach where our products are sold in a very small kind of nutshell for us.
So you are absolutely right. Our primary markets are Karnataka and the neighboring states.
So any initiative which our company is trying to do.
As of now, we have not done it previously because overall the whole retail market, the value addition, what I saw previously when I studied it about a few years back, it was not significant.
Welcome, friends. My name is Avinash and I welcome all of you to another interesting episode of Konexio HighFlyers. Friends, in these episodes, we introduce to you emerging companies from emerging sectors, and we make it a point to talk to the promoters and the top managements of such companies. This helps us to understand these companies in a much better way. We get to know their business model, their growth journey, their future growth plans. And in this process, a lot of valuable information is shared by the promoters, top management, which helps all our investors to get a very good information base, which helps them take a conscious investment call. And friends, today we have got another interesting company which operates in the sugar space. The company's name is Davangere Sugar Company Limited. And I have the privilege of having Mr. Abhijith Ganesh Shamanur, who is the non-executive director of the company.
Good
Abhijith,
evening.
welcome to the show and thank you for your time.
Good afternoon, Mr. Avinash sir. How are you?
Yeah.
Thank you. Thank you for having me.
Yeah. So first question, Abhijit ji, which is very elementary. We just want to understand, if you would explain to us what is the broad business model of Davangere, and was this started by your father? Or is it a first generation effort? If you could please share your thoughts on this.
Okay. So Davangere Sugar Company is almost 50 years old, Mr. Avinash. So it was actually a joint sector company which was started by the Karnataka Agro Industries Corporation, Karnataka State Industrial Development Corporation, and farmers from the Davangere Taluk. And financial institutions such as IDBI, ICICI, and IFCI were also present during the incorporation. So this was done in 1970, and the first initial sugar production was done in 1974. And in 1995, our family, the Shamanur Group, had took over controlling stake, and by 1995 and 1996, that is when we took over and completely privatized the company and have taken over operations.
So, Abhijit, now the next question is: since we operate in Karnataka, can we safely assume that for us the main market, the consuming market for our product is Karnataka and nearby markets? If you could tell us the geographical kind of reach where our products are sold in a very small kind of nutshell for us.
Okay. So you are absolutely right. Our primary markets are Karnataka and the neighboring states. Considering sugar is a commodity, it is sold in a wholesale manner, and we have traders within the state as well as spanning all the way up to West Bengal. So we do have a strong advantage in terms of we are located in a high sugarcane yield and belt, and so our ethanol on the other hand, it's been more than 2 years. It's about 2 years since we started producing ethanol. That geographically, we are supplying in state. We supply to the OMCs, which is IOCL, BPCL, HPCL, and it's based purely on government allocation to the depots. So previously we have supplied to other states. Currently we are supplying in state, and that is how the scenario is.
Okay, no, understood. Abhijit ji, now tell me one thing. Within the sugar product basket, is the company trying out any other innovative product? A lot of sugar companies have been reading that a lot of value-added products are being launched by them. So any initiative which our company is trying to do so that we can get better yields and better margins, on non-regulated or maybe slightly B2C kind of product, because I've seen a lot of companies selling value-added sugar in packet form to the customer. So any initiative from our company on this line?
As of now, we have not done it previously because overall the whole retail market, the value addition, what I saw previously when I studied it about a few years back, it was not significant. Investment versus value addition and all the costs associated with retailing the sugar. But I think down the line, future, it is good. It'll increase Davangere Sugar's company presence, marketing presence, and we obviously have the capability of producing that high quality refined sugar which the market demands. So the plans are in the pipeline, but we have not done it in the past.
Okay. No, no, understood. Nice to know that. Abhijit ji, now tell me one thing that, what is the main source of the raw sugar cane? Because that is the key raw material for them, us. So typically, how many farmers is the company associated with on a very approximate level? And from which areas do you access the sugar cane? Because, this is a very important input for us. Availability of sugar cane, that too from nearby proximity area, and obviously from a well built kind of farmer base is obviously going to help us. So something on this, if you could tell us.
Of course. So obviously, considering the company has been almost 5 decades old, so we do have strong farmer relationships, and we are always providing them with inputs such as seeds, loans, fertilizers, all of that. We have a farmer network of approximately 5,000 farmers, and we have under our cane command area cultivation belt around 30,000 acres. So
Okay.
the sugarcane which comes to our factory ranges from up to 5 kilometers, which is in the same village where this factory is situated, and it goes up to 130, 140 kilometers.
Okay.
So obviously, it makes financial and geographical sense to procure sugarcane in and around the area. So
Yeah.
in the last few years, our entire initiative is to increase plantation incentives within say about 70 kilometers, so our transportation costs reduces, and we are able to get high yield sugarcane within our vicinity itself.
So, I think very nice to know. Abhijit, ji, now tell me one thing. Broadly on a macro level basis, you are right in saying that sugar is a commodity, but it's a very essential ingredient. Typically, tell me, according to you now, since your company has spent more than 5 decades, how do you see the consumption of sugar growing? And is there a large export market also available for us apart from the domestic market? If you could please share your thoughts.
Okay. So, considering the fact that the sugar industry is highly governed by the government policies, and it's highly regulated, so there are sugar export possibilities year on year. The government changes the policies. So this previous year there was an export policy. In the coming year, based on the sugarcane availability and the sugar produced and the domestic demand, the government will decide again.
Yeah.
So year on year, the regulations change based on the export market. So I primarily see the domestic market as a stable consumer for years to come, where there is no fluctuation in policies. And considering the amount of how the population in India is growing, I would only see sugar consumption to expand. It's not going to curb down. It's not going to reduce. As of now, the current trend is it is increasing. Down the line, 10 years down the line, how health conscious consumers get and all of that, that is hard to say. So that may be the only factor which may drive sugar consumption down by the typical
Yeah.
household.
No, but I think you're right in saying, Abhijit ji, that manufacturers are also very smart nowadays. Today health trends have come in, but new forms of sugar have also entered the market. So sugar as a commodity cannot disappear. We Indians cannot live without sweets. So sugar will be a very important commodity segment. Tell me one thing. On the ground now, already FY 25-26 has already started. Without giving a number, if you could tell us, on the macro side, how do you see this year's sugarcane crop? Do you expect that this year also we should have a reasonably good crop so that availability of sugarcane is assured, production is assured? If you could give us some, basically some inputs on this, which can help us understand how we are expected to do well over the next, say, 12-15 months.
Um, I personally am at the viewpoint that sugar production may be slightly higher than last year, and due to better rainfalls in the previous consecutive year and all of
Yeah.
this. So, in terms of that, I don't see a huge dip in production, but estimates vary state-wise, and of course, the weather conditions associated with that. But overall, I don't see it to be completely on the lower side as
Okay.
it was previously. Yeah.
Okay. So availability should not be a problem. That's the most important thing. So availability
Yes.
of sugarcane, if it is assured, then I think crushing, from your side, the number of crushing days as well as the number of sugar crushed by you is definitely reasonably well assured. That's the point which I wanted to ask you.
Yes.
Now tell me one thing. Typically, what has been the trend in the government minimum support price? Because as you said, the industry is regulated. this minimum support price over on 3 to 4 year basis, how is this price? Has it been increasing at a moderate pace, which the sugar companies can generally afford to pay to the farmers, or is it something which there is some negotiation, between the sugar player, the government, and then finally this price is decided? Because that is the backbone of your costing. So if you could
Of
give
course.
us some idea, how is this decided? And frankly, are you able to match that increase with better realizations which you sell in the market?
Okay. So it's actually the FRP, sir. So this is a sugarcane fair and remunerative price, which the government sets every year. And this year they've increased it. They've increased it to 355 per quintal, so around 3,550 per ton. Last year it was 340. So
Yeah.
around 15 rupees per quintal is what they've increased it to for a recovery of 10.25. And
Okay.
based on your sugarcane recovery, so the price will vary. Usually, the
Okay.
government sets the price. There is no further negotiation about giving the farmers a lower price because this is the government mandated price. If anything,
Exactly.
there are farmer negotiations which happen almost every year where the farmers try and demand for a higher price. And
Correct.
we have previously done it in the past where there have been prices which have paid higher than what the government has stipulated. But with the current trends in the industry, we usually stick on to what the government recommended fair remunerative pricing is.
So,
And also, one more thing I'd like to add
yeah.
currently, the minimum support price, what you were referring to, is actually the sugar sales price. And
Uh,
the government has capped it at 3,100 per quintal. And
uh,
they have not increased it for several years. So in
oh,
terms of they have, even though the market prices today, of course, the market prices fluctuate over the months. Today, the ex factory price, of course, for everybody has shut down their sugar mill. There is not abundant amount of sugar available in the market. The market prices have gone out to 3,800, 3,900 a quintal. But the minimum support price is 3,100. And
oh,
soon as our production starts, the prices will fall significantly. I think ISMA
okay.
is also trying to really persuade the government to increase the minimum support price,
Okay.
but nothing has been finalized in the government as of now.
Okay. Okay. No, I think understood. Abhijit, though, basically, please correct me if I'm wrong. It means if the minimum support price has not been increased, typically our success lies in the fact that how optimally we manage our cost, right? If our
Absolutely.
cost structure is optimally managed, we can still manage to survive and flourish. So this is first question. And secondly, I want to understand: is this business which we do, is this a seasonal business? Like normally, the second half, October to March, is slightly better than the first half. I mean, is it true?
So you're right, sir, in saying that our sugar production runs from the end of September to October. Usually, our sugar production starts, and it goes on for until February, March, depending on sugarcane crop available and how many crushing days there are. And then it is usually off season before. So we have an integrated sugar, ethanol, and cogeneration power plant. So before that, ideally, whatever leftover bagasse, which is actually a byproduct of sugarcane production, it used to be utilized as fuel for our cogeneration boiler, and power used to be exported. Power
Okay.
used to be exported to the government, and you would additionally run your cogen power plant for another 2 months or 3 months,
Yeah.
depending on how much bagasse you've saved during the season.
Yeah.
But this scenario has changed now with ethanol coming in, where we operate our at least our ethanol plant for around 300, 310 days of the year, up to 330 days of the year with minimal
Okay.
maintenance. And
Okay.
sugar is ideally operating only on 6 months.
Okay. Understood. Now, having told me the ethanol, division, Abhijit ji, if you could tell us what is the capacity and what is the kind of, contribution this company makes to our turnover as of now, and going forward, what are the kind of growth plans for this business? Because typically, as everyone is aware, ethanol is the new fuel of the future. The government is also pushing it. You've got an ethanol facility. So, going forward, how do you want to position yourself as an ethanol player in this market?
Okay. So our ethanol production capacity is about 65 KLPD, sir. This may be relatively not that large in comparison to the big players within the industry, but
Yeah.
we are in the process of expanding to around 85 KLPD, and
Okay.
we have already started the work. We are finalizing that. So by the year end, we would like to ideally grow the capacity to 85 KLPD. And looking at the raw material scenario and all of this, we are located in a maize rich region within Karnataka, where this is actually the highest maize growing area within the state. And of course, we have abundant rice as well, broken rice available. So our raw material shortage and raw material scarcity is not an issue. So in the next few years, we'd like to increase our capacity even higher and
Okay.
reduce our dependence on sugarcane, because sugarcane is more affected by the cyclical weather conditions and all of that. And this will definitely increase our turnover significantly. In the past, we have actually done where ethanol in the last 2 years, I would say, where ethanol contributed to about 50% revenues
Okay.
and 50% revenues and 50% from sugar. Last year we
Okay.
surpassed that. If I see this correctly, we yeah. So I don't know the exact figure, but it was yeah, it was around 70% of ethanol contribution, and then the balance was sugar contribution. Considering there was a low sugarcane availability, ethanol may surpass sugar revenues. Ethanol is a driving force. Sugar is only going to support this even further, considering that whatever raw material sugarcane end products such as sugarcane juice and molasses, it's again supplementary, where 4 or 5 months you operate on molasses and another few months you operate on sugarcane juice, and the rest of the year you operate on grain.
Correct.
So yes, that's the optimal mix.
But I think very nicely articulated by you, Abhijit. So I think the ethanol facility is a multi raw material functional facility. You can use broken rice, you can use corn, maize. So this gives you good flexibility to enhance the production. So you're not dependent only on molasses. So that's very nice to know. Abhijit, now one very important question is that, see, commodity wise, sugar is a product which is finally driven by demand supply. But ethanol, of course, you got an edge because you're gradually expanding capacity. But in both these segments, typically how is the company's focus on the value addition factor? Because today, apart from us, there are many other sugar companies which operate in the Karnataka belt. Now, if I were to ask you a very simple question, that for the last 50 years, how have you managed to get repeat business and ensure that the customer is also satisfied, you get a good price? So, what is the value add? Any two, three qualitative points which can tell us that, we do a better job, comparatively better than maybe some other competitors who operate in the same, geographical segment. So if you could please tell us.
So, from an industry as a producer's perspective, sir, I would say the value addition is you're trying to be as cost efficient and economical as possible. Okay, so it's a zero waste, zero discharge operations, and you're trying to monetize the byproducts in all angle. So you produce sugar, you produce press mud, you produce fertilizer, which is in turn utilized for fertilizer. You produce fly ash, you produce ethanol, you produce DDGS, which again goes towards cattle feed, and you're generating power. And in terms of how do you stand out differentiation factors, I mean, going back, we are still very quality conscious. The fact that our sugar used to be demanded and sent every year, we would send multiple amounts of sugar through train bogies all the way to West Bengal and all of that, because our quality was great in terms of clarity, color, crystal size, all of this. So that's what the traders as well look at, which obviously the end consumer also looks at. But I
Correct.
think sustainable plant operations, cost efficiency is key, because this is a very capital intensive industry, and it only becomes harder and harder the year by year.
No, no. I think you're absolutely right that it's a tough business and you got to always be on your toes to maintain your cost, kind of optimization. So that's very nice to hear, Abhijit ji. Now tell me, Abhijit ji, basically, FY25 year, financial year has ended. If you could tell our viewers broadly what has been the top line, what has been the profit the company has earned, at least the operational performance for March 25.
Okay. So we did a revenue of around 215 crores. So it was a slight dip from the previous year. Well, the previous year we did around 220 CR. So this was obviously due to the shortage of sugar cane,
Yeah,
and but this was somehow balanced by the continuous ethanol production.
yeah.
We got an EBITDA last year of around 53.75 CR, which is around 25% margin,
Okay.
and PAT was around 10.93, so around 11 CR.
Okay.
So I'll just add a little more thing. So the main issue here, I would say, is I feel like the PAT can be significantly improved. So we have high interest cost, high working capital cost, and the whole reason we are obviously going for a rights issue is to reduce our capital cost burden, reduce our debt burden, and operate in a much more efficient manner. And you're able to
Okay.
provide shareholders also with much better value.
Okay. Well, understood. I think this leads me to the next question, Abhijit ji, that basically if you could tell us what is the size of the rights issue we are planning and what is the rights ratio which we are offering to shareholders, and when does this rights issue start and when does it conclude?
Okay. So the rights issue will be starting on August 14th, and it's going to be concluded on August 29th. And the rights issue size is around 149.21. So almost around 150 CR,
Okay.
where we are hoping to majority of the amount we raise. So around 100 to 105 CR, we'd like to raise from the capital markets, and around 45 CR, the managing director, he's going to subscribe to his unsecured loans, so the adjustment of the promoters unsecured loans. So
Okay.
the whole goal is to completely utilize the funds towards repayment of the borrowings and keep some for general corporate purposes such as working capital and ethanol expansion, what is underway, what we are planning to do. So the whole goal is to reduce the interest burden, reduce the debt burden, and operate in a much more efficient manner.
I think, please correct me if I'm wrong. So basically, the main objective of the rights issue is to deleverage the balance sheet, reduce the
Yes.
loans on the books, and some money will be kept for working capital and general corporate purposes, right?
Yes, absolutely. You're absolutely right, sir.
Okay, now just another simple question. Now, since we have already started FY 25-26, without giving a number, Abhijit ji, if you could tell us, what kind of signals are we getting from the market, from your marketing teams, like both on the ethanol as well as on the sugar side? I mean, can we expect that this year to be a much better year in terms of the volume throughput, in terms of the prices? If you could just describe and give us a small outlook, how do you see the next 12 years, 12 months for us? How we are expected to do?
I would say, in terms of raw material availability, there is no issue, sir. And considering our industry is highly dependent on raw material, volatility and fluctuations within the raw material is what affects our top line significantly. So I don't see any issue with achieving current top lines or even surpassing them. Of course, with how much sugar is produced within the country and how much surplus stock the government currently has and how much is going to go towards ethanol diversion, that we'll only know by the end of the year. But as of now, the trends look good. Ethanol supply is also continuous. Sugar is obviously off season, so there is less sugar in the market. Once production starts, sugar prices will fall, but there'll be abundance of sugar in the market. And
Correct.
no, there's no major change in the ethanol policy this year as well,
Yeah.
and or the prices. But we'll have to see if the government decides to increases the prices for ethanol. Also, that would be even better for us.
Yeah, no, I think you're absolutely right. The ethanol policy has been quite positive for the ethanol players, and we have been seeing, that regularly from time to time the government has increased ethanol prices. So that becomes a big positive trigger for our company. Abhijit, now one important question which you mentioned earlier. Working capital is an important component for us. So typically, what's the working capital cycle for us? Since this is a seasonal business, you mentioned earlier for sugar, ethanol, maybe you said rightly that it's a consistent 12-month kind of business for us. Typically, what's the working capital cycle for the overall industry, and how is it different for us? Is it more or less similar to what the industry cycle is for us also?
For the sugar industry, I would say it's very different in comparison to the other typical
Yeah.
industries. Where so the working capital cycle, our requirement is the highest during our production season. So between September up till March, it may go up even till April and May, where our capital requirement is the highest because obviously you're procuring sugarcane, you need to pay the farmers in a
Yeah.
stipulated period of time, and you have high inventory stocks because sugar works on a release mechanism. So the government gives you orders where you are only allowed to sell certain amount of sugar every month. So
Correct.
it's highest during this period between September to April, and then it eases down a little bit once farmer payments are cleared and all of this. But the main plus point has been the cogeneration and ethanol has allowed us to ease these cash flow cycles where payments are coming in within stipulated periods and where you're operating year round. So this kind of supports us in terms of easing payment cycles, but it's still high cash crunch during that period.
Okay. Fine, understood. Last question now. Just wanted to understand that sugar is a very cyclical business, Abhijit. We have to obviously depend on the weather's conditions. How the crop is going to come in. That defines the availability. But tell me one thing. In our business, what is the most important risk? Because managing a sugar company is not an easy task. It requires a lot of cost optimization, and obviously it's a regulated market. So from your sense, since you all have got such a large legacy of almost 50 years plus, what is the main risk in our business, and how have we managed to effectively take care of that? If you could please tell us.
Okay. So you are absolutely right in saying that there are climatic and sugarcane shortage risks. So I would say the biggest risk would be that it's been fluctuating and it's been seasonal. So every 3 to 4 years there will be a time where significant drought and low rainfall will affect our crop yield and our production will reduce drastically. So that is one thing. And secondly, we try and maintain very good farmer relationships, because there's obviously a lot of competition which has come in even within our vicinity, about 100 kilometers. There are a lot of new sugar producing companies which have come over the past 5 to 7 years, and this increases the competition significantly, because farmers also they are also free. They decide to give the sugarcane to whoever they want. And there's also, we are highly sensitive to the government's change in policies and their pricing. So we are definitely at the helm of the government. We can't operate really in a free market mechanism per se. And there's obviously volatility in sugar prices, ethanol prices, the raw material to sale price ratio. So major thing is we need to be super cost efficient here and make sure that we're trying to be efficient in all methods possible.
No, fine. I think so. It means the runway is large, but there are going to be these normal occupational challenges like weather as well as the government policy, which I think is part and parcel of the sector. So anyway, Abhijit ji, thank you very much for your time. I think all our investors would be very happy to hear your interview, so that they get good valuable information about the company. And please accept my best wishes for you, your entire management team, and the rights issue. Please wishing you all success for the issue going forward. Thank you very much.
Thank you. Thank you very much, sir. Thank you for your time.
Thank
Take care.